Sounds like a lot of these are tech or energy focused. Kind of curious of like the approach here. Are we expecting to see more quantum? You mentioned quantum. Will quantum names kind of surface, or how does this kind of get constructed?
Yeah, of course. So quantum computing, whilst it is I would say very much a strong buzzword, obviously is still a very small, nascent, and relatively new area when it comes to the stock market. And typically, quantum specific stocks are relatively small in market capitalization still, and therefore we would expect them to only represent a relatively small portion of this universe for now. But ultimately, the way the portfolio is constructed of the critical technologies ETF CRTC is it starts as sort of relatively broadly. It has as a selection universe a developed market only universe. So all the large and mid-cap companies that essentially are listed across the globe in developed markets are potentially eligible. But then by and large, there's a trimming down. The first step, if you will, is a revenue-based approach that looks at, okay, how much are the companies that are potentially eligible for inclusion in the portfolio exposed in terms of revenue, in terms of business conducted to the different themes. So that narrows down the universe quite significantly. And that's, I would say, a very key step also, because often we get asked, hey, why are certain companies not included that we would expect to have included? For example, Meta, we would expect to potentially see included because they are very much a big tech company. However, there is a second screening step, and that is referred to as the geostrategic risk screening. So that's a bit of a mouthful, but ultimately what it means is the following, and the concept behind it is the following. When we talk about those areas of critical technologies and critical for the United States in particular, obviously we're talking about relatively sensitive areas, and sensitive in a sense that potential politically strategic adversaries could, regard those companies as negotiation tools or as potentially vulnerable to potentially adverse actions towards the United States, and therefore CRTC or the ETF employs a risk screening process which screens out companies that have too much exposure to countries that are regarded as political or potential political adversaries to the United States. That includes Russia, that includes China, that includes North Korea and Iran. And the analysis that this ETF employs essentially screens out companies where that risk profile is regarded as too high, and focuses only on the companies that are active in the areas but do not have the risk profile that is undue according to the screening process. And therefore, from an initial universe of potentially 1,400 companies, it's narrowed down to a portfolio of roughly 220 companies that ultimately make it into the portfolio. The weighting then is largely market capitalization weighted with some caps, but in order to ensure relatively high liquidity and tradability of the profile, it somewhat resembles a market cap weighted universe inside the portfolio.
Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.